Not the best way to start off the year, but I'm confident about the insane growth we can expect to see this coming year. I mean, I think it's a good transition, in fact, into our main topic where we're going to review our predictions from 2020, our accuracy, and then our new predictions, of course, for this year.
Yeah, so let's see how good our foresight capability for this industry really is. Let's start with you, Herwig. I'm going to review your predictions and then we're going to judge them. And you can maybe do the same for me afterwards. So, for anyone who's curious, you can listen to our predictions episode where we laid all these things out. The main topic clip is specifically on YouTube. That's episode 25 if you wanted to dig into it.
I think that sounds great. I'm not afraid of being wrong at all anyway. So typically I am. But I'm also curious to see what I over anticipated and also what I underestimated. So let's have at it.
Yeah, we had some insane development here, so the predictions are crazy. So here are your predictions. So you led it off with a prediction that the USA would pass legal guidance regarding digital assets through passing a bill through a regulatory response sometime in the calendar year, which would lead to a revival for crypto and blockchain. So while the SEC was active and did made some interesting clarifications, no bill was passed. And I don't know if this one was totally spot on. Maybe we're just a little premature.
I think that one's definitely a little early. We saw a lot of changes within the SEC framework all around the world, but nothing that I think we would have wanted to see the extent that I was talking about, at least in terms of defining security tokens, something we've been preaching on the show. So hopefully, indeed, a little bit early. What was next?
Up next was your prediction that over 100 private markets would be in development to help create liquidity, whether through broker-dealer networks, exchanges, or issuer-managed liquidity options. This was also a bit of a two-parter, as you also felt strongly that issuers would place a high value on the price controls for their assets over the increased liquidity from working with a centralized exchange. So that's a really interesting prediction. While we have made a pretty large list of rumored security token exchanges in development, I don't know if we've quite hit 100 yet, and many are crypto-focused exchanges, and listeners on the show might know that the enhanced regulatory requirements surrounding trading securities is a massive barrier that may exclude many of those less focused players from actually pursuing that development. But I think you were pretty close on that first part, but the ideas around issuer managed liquidity haven't yet been realized. It does seem like most issuers are choosing to work with brokers and exchange partners, and aside from TokenSoft with its own equity and Arca Funds token, we haven't really yet seen issuer managed liquidity enter the mainstream. For now, it seems like issuers are siding with exchanges.
Other than the one side about, of course, Uniswap and DEXs being on the rise, it does seem that way, Kyle. I still think there is an underrated liquidity mechanism and one that can provide more active, issuers with a tremendous amount of control over the price and availability of their asset, while also keeping, the cost of efficiency in exchange much lower than traditional methods. So, that's why I want to note that Uniswap decentralized exchange, even though it's not fully issuer managed, although it kind of is, does provide a middle ground of sorts here that does begin to blur the lines between these liquidity options. And it certainly has proved to be a very viable option for many issuers, including Realty, Mount Pelerin, and who knows how many others.
Yeah, from there, you tackled a few institutional predictions. First, that we'd see a tokenized employee stock option plan in the 50 to 100 million size in the private markets, and that bonds would be the most tokenized asset due to enterprise usage from banks. You followed that up with the idea that real estate would become the second most tokenized by volume, but the most actively traded asset on accessible marketplaces. And while we did see the TokenSoft deal with Fidelity focused on that tokenized reward system, we're still trying to figure out exactly what the size of that offering was beyond the pilot, and can't really confirm exactly the size there. So while that projection was fascinating and was kind of interesting on the mark, I think you crushed the second part, as we've noted with many huge securitized debt offerings throughout institutional banks and financial service providers. And I also think that potentially billions of dollars of debt have already been tokenized. Then in addition to that, real estate has almost certainly become the most actively traded asset. Many of the real estate properties have the highest adjusted liquidity rate of any asset class in the market. We're certainly seeing them sell out like hotcakes across many different issuance platforms around the world.
Yeah, definitely real estate thriving totally. That makes a lot of sense. It was the most successful industry back in the days of the equity crowdfunding. And the pattern continues within the security token industry. I'm actually only expecting that to continue to grow in 2021.
I totally agree with that. We're going to get into my predictions too on that front. But on to your second half of your predictions, this is where you really went on a hot streak. Starting with your estimation, we'd see at least 10 billion in primary tokenized and about a billion in market cap on the secondary market. You followed that up with an estimate of around 50 million in trading volume on the year, which you kind of calculated through 5% of the market cap. And while we can't say for sure that 10 billion happened this year, it's definitely a real possibility across the globe, especially when you're factoring in all these private debt instruments like the ones that we just referenced. On top of that, your secondary trading market cap was about double what we ended up seeing to close the year. But the 50 million figure on the year is actually spot on for volume because the secondary trading volume for 2020 was about 54 million. So nice work there.
Well, my ratio might have been slightly off, but I'll take the correct figure on the trading volume. And, who knows, a change of asset value might have made us hit that $1 billion market cap. But I think we both wanted more listed tokens to really account for that. And I know that many of these assets wouldn't be trading daily, which is also the case for many of them this year.
Yeah, and so then after that, you correctly identified that one major protocol would not emerge as the de facto standard for security token offerings. And so while Ethereum was certainly the most common platform to use, it does have significant drawbacks in terms of the scalability and the costs that leave the door wide open for other players. So we've also seen issuances on Stellar and Bitcoin, Tezos, Algorand, Ravencoin, and others who offer unique benefits and still provide significant competition for Ethereum as we move into 2021. So well done on that one. You continued that with the idea that no major investment banks would lead a large tokenization deal this year, but mentioned that many would likely be monitoring the space, waiting in the wings until a clear opportunity presents itself, which has also been very, very accurate. And then despite that, of the 7 to top 10 largest banks and then 39 of the top 100 have been exploring blockchain projects, none have yet to launch their own major tokenization deal. In fact, the largest piece of news I can think of at the top of my head was actually JP Morgan selling its blockchain solution to Consensus.
Yeah, this result doesn't really surprise me. While we'd love to see some of the largest institutions, dive in head first, they are very consistent in allowing innovation to grow and develop in smaller ecosystems and in test trial environments before acquiring a top solution or building their own once the market has been fully proven.
You also correctly guessed the first tokenization of a publicly traded stock would come to market, which we saw in May from Overstock. The rumored offering had many delays, but it was successfully brought to market by our company of the year for 2020, T0. We also saw ARCA and INX launch as you predicted, but with less success than maybe what we saw from Overstock's tokenized dividend.
Yeah, I think each of these offerings made its own unique impact on the industry, and they all drove us forward through additional regulatory clarity, through setting precedents for the future, and by proving theory correct through real-world execution. It leaves me very, very excited for the future.
And now on to your final few predictions of the year. The first was that we'd have a major hotel chain explore tokenization. The second, that we'd see the first securitization of loans fully originated on chain. And third, that security token infrastructure companies would raise over $200 million in 2020. And I think that each of these you were spot on with the idea, but maybe just slightly premature in a couple cases. So we did in fact see a tokenized hotel with the St. Regis Aspen Resort, but it doesn't quite fit the description of a major hotel chain as it's really only one property. Your second prediction, a mass securitization of loans from the Provenance blockchain from Figure, was spot on, and in fact, this securitization was the largest since 2008, so you were right on the money there. And then finally, regarding the $200 million in security token infrastructure investment, I certainly know that your team at Security Token Advisors is actually calculating that report currently, but as far as I know, I think you're just a little bit off, as we're closer to probably $100 million that we can find in the last 12 months. But that doesn't necessarily include DeFi and the other blockchain companies that certainly play a huge role in the development of security token industry. So, and I think we might be much closer to that 200 million figure than we even really know yet. So that number doesn't even include the tally of some of the other tokens that are raising money. So I think that one's incredibly close, and I'd give you a point if we were keeping score.
Right, INX is raising over $100 million. We know there was a lot of confidential investments that went down. So unfortunately, the true number is definitely not possible, but definitely does seem like I was off by a factor of 2 there. Overall, you never know with these other kind of outside projects, but I think I did pretty well. I think so. Definitely the market predictions for a year out are tough to do. However, from an industry growth perspective, I'm happy with some pretty accurate predictions. I'm definitely more confident about this year now. You ready for your review, Kyle?
Come at me. Let's do it.
All right. Well, you had 8 different predictions last year, Kyle. The first, like mine, being around regulation being drafted in the U.S. You said it would be due to Libra, and the regulators would define a wider basket of assets as securities, regardless of the case for them being potentially commodities or currencies. And in that regard, I think you are right that regulation is being drafted. We saw numerous bills get introduced trying to regulate stable coins, security tokens, and cryptocurrencies, of course. And Libra definitely brought the attention to the main stage despite despite completely flopping to this day. However, we haven't seen any changes to the regulation itself regarding expanding the definition of securities or specifically defining crypto assets as a commodity or a currency or otherwise. So I think, again, on the regulation front, we were both yearning for a little bit more from the regulators, including, again, fully defining security tokens.
Yeah, I think that's a fair summary. We certainly didn't expect a lot of the other changes that the SEC has already made to improve capital markets either. So those are good things at least.
So a good and a bad. Indeed, your next prediction, though, was that there would be a blockchain usage by institutions for debt and fixed income products, but that they wouldn't be available on public markets and to retail investors. And of course, as we reported on the show multiple times this year, that's spot on. No institutional debt products are available yet via any of these major marketplaces or exchanges that we talk about, though we almost always saw something go down, with Fusang and the China Construction Bank, and we've seen many other big institutions leverage blockchain-type tokenized bonds or debt products in order to test the technology and the application.
Yeah, it does seem that these large institutions tend to kind of keep things private as long as they can. So that one doesn't surprise me a whole lot. It would have been very surprising and game-changing for sure if it went public, but I'm not super surprised about that one.
And in the next prediction, Kyle, you were flat out wrong. Oh. So predicted, Spencer Dinwiddie's Dream Fan shares. This is the platform, by the way, if you're not familiar with it, the platform that NBA player Spencer Dinwiddie used to tokenize his own NBA contract. And, your prediction said that he would issue 5 new tokens, including 2 with either the MLB or an artist from the entertainment industry. And unfortunately, we saw Spencer's own token this year, not become fully subscribed by the market. And it seems that they have since pivoted to Galaxy, which is not quite the Dream Fan Shares platform, but still in the crypto world. So still we know, as a result of that Spencer's focused on blockchain and digital assets and is definitely merging the sports and entertainment world. So I doubt, we've seen the last of him, but unfortunately, Dream Fan Shares did not have the level of success you were rooting for, Kyle.
Hey, sometimes it's fun to go for the home run. I think I peppered a couple of those in there later for my predictions. And, we couldn't have predicted Corona pretty much crushing the NBA season and certainly causing a real impact on Dinwiddie's plan here. I'm certainly sure that there were a lot of issues that came about with that. And I still remain optimistic about the platform and what he's doing. Building new asset classes like this is certainly not easy. And I commend him for what he's done and accomplished in this space against all odds.
Same here. Fully agree. And good news, you were accurate about your next prediction. So, which was that rental properties would become the next hot token sector. You anticipated it would become $100 million industry. And we do know realty has tokenized millions of dollars worth of property. So globally, this could quite possibly absolutely be the case already.
Yeah, I hope so. I might be a little bit overexcited. Maybe for 2021, that one's maybe a little bit closer to being correct. But there are certainly no signs of stopping for real estate and tokenization. And I really expect that yield-based opportunities like rentals and commercial real estate with strong foundation are just going to continue to thrive.
I think so too. And next year, next you predicted, similarly to me here, that securitization and on-chain origination would benefit from blockchain, which figure, of course, proved already this year very successfully, I think. And you went on to predict that exchanges would end up specializing, which I think is still a year or two out right now. Personally, we've seen a lot of marketplaces claim concentrations in specific types of assets, but I personally think I have yet to see an active enough series of marketplaces that, individually have begun to focus on one specific asset class.
Yeah, I don't think the secondary market has developed or matured as quickly as maybe I anticipated it, but I bet that you will see that in my market growth prediction as well.
Yeah, which is what you will see as you predicted 3 times what I thought the market cap would be. So you said $3 billion. Now you did underestimate the volume in which I think the trade, you said it would be 2.5%. But maybe we will hit levels like this for 2021, I think.
Yeah, I was definitely off by quite a bit there. I think I was just getting really excited. I did expect more listings to occur this year across numerous exchanges, but it does seem like you're right. We can probably expect something similar this year. So, however, I will say my volume to ratio wasn't too far off, as we did see volumes peak right around 3% of the security token market cap. So I will take a small win there.
Yeah, very, very much closer than my 5. And finally, you predicted that we see $100 million in infrastructure acquisitions based on the fact that new entrants and larger financing rounds will lead to market share roll-up. and the access to specific licenses to operate, of course, specific business models. So it's impossible to say, if there were 100 million M&A deals in the space, mostly because all the deals that did go down in 2020 were undisclosed. But it's extremely unlikely that they did reach that level. We did see INX and Securitize buy their own ATS licenses, and we saw several acquisitions go down, especially by Republic, which acquired several crowdfunding portals that were asset specific. So your logic was definitely still spot on.
Yeah, I like to think my thinking was correct there, but the number was most probably off by quite a bit. But this logic and line of thinking probably will still continue into the future, and those licenses are valuable, as we've seen from INX going after OFN, and I think you're only going to see that more often. But the numbers are pretty difficult to pin down in such a large industry with so much potential and so early in that process.
Totally, Kyle, and we can actually redeem ourselves and improve our accuracy by sharing our predictions for this year. Yeah. So let's start with the hottest of them all, the total STM market capitalization of the secondary market. What's the size and what's the trading volume? Last time you were clearly a little optimistic on the overall size, but pretty accurate on the volume percentage. So what do you got for this year?
Well, Herwig, I think that for 2021, I'm going to take a slightly more calculated approach to my market prediction. Over 2020, the market cap grew by 5.5 times, so I'm going to shoot for a similar multiple in 2021, which leaves our closing market cap at 375 here in 2020. So I'm going to predict that the market cap will be right around $2 billion to close the year 2021. And then following the same vein, the trading total will be similar to the 15% we saw this year, which would bring the total for 2021 to 300 million in trading volume, $2 billion and 300 mil.
Well, it seemed my conservative answer was closer the first time around. So, in fact, trading volume for the year was actually pretty close as well. So, I'm going to go with my earlier prediction of what you did last year by putting the market cap at $3 billion in the secondary market, which we cover via stmarket.com, by the way, listeners. And I'll also go ahead and increase it to from a 5% to a solid 7.5% in the trading volume for the year. So, that's roughly 225 million in trades under the market cap prediction. So interestingly enough, I'm this time going higher on the market cap potential, but this time you're going higher on the volume and the trading.
Yeah, very, very interesting. So let's just dive right back into our next predictions. What else did you predict for 2021?
Yeah, from a regulation perspective, I think we're going to see either a bill get passed or the SEC allow for one, maybe for the use of blockchain-based electronic registries for tracking ownership, as we've seen in some other countries. Unfortunately, I do think that the transfer agent requirements won't change, despite them being, more redundant now as a result. And that's mostly because I think that requires way too much of an overhaul of current regulation and law. But a smaller bill or something like that to support security token and blockchain innovation for capital markets would work, I think, and the regulators and legislators are open-minded about it since they are getting more and more educated about blockchain and tokenization every year.
Very interesting. I think that totally makes sense, especially with some of the newest guidance that we've already seen that points into that direction. In the same vein, I really think that we're going to see some additional expansion in the accredited investor definition with the additional access of Reg CF due to the increase in yearly cap from 1 to 5. The SEC has clearly showed some willingness to include more of the public into private deals, and I'm going to take the hot take that they continue this trend by widening access for more investors here in the U.S. Potentially graduate degrees or other higher education is the place they start with. I don't want to totally put my name on that one, but I do think that they're going to expand it in some way, in the same way that they did this year for those that hold Series 7, 65, or 82.
So historically, the definition of a accredited investor has only ever expanded due to the account for inflation. So when they changed it, this was historic. I personally don't think we're going to see further expansion within 1 year time frame, but certainly I obviously hope that this is the case. The SEC will definitely be monitoring the effects of expanding the current definition for now. And another prediction I have is that we will see the market for stablecoins explode. Multiple banks will launch stablecoin initiatives themselves, and the supply of stablecoins I think will probably 10x from 20 billion today to over 200 billion by the end of the year next year. And I think this is a result specifically due to the recent OCC changes we mentioned at the start of the news cycle, as well as the CBDC growth around the world and the security token industry's growth as well, being also a part of the solution with stablecoins.
I think this is a great one too. I think the newest comments from the OCC only bolster this prediction, but I actually think I'll take it a step further and predict that at least a few banks in the top 100 will begin using a public blockchain to facilitate some type of banking operations. This is an additional feature of that OCC's clearance, and I think maybe you'll see some sort of DeFi application or smart contract solution developed on Ethereum in 2021.
So it sounds to me like you're saying a big bank will also leverage or develop a DeFi solution in 2021. That is a bold prediction.
Hot takes only, baby.
Hot takes. Although, given the fact that Societe Generale, top 100 bank, has already used Ethereum for one of their own test transaction, maybe, just maybe, they are willing to be innovative enough to go to that next level, or someone else is. And how about infrastructure growth? I predict that infrastructure companies, I think, this year will raise an additional $300 million in fundraising over the course of the year, up from my $200 million prediction from last year, but really only 3 times what the actuals were of 2020, given they were $100 million, right? So I also forecast a lot more M&A activity. I'm going to say, let's say a dozen or so deals of varying nature within compliance, marketplaces, and licenses, as well as what I would call some rescues, at least 1 or 2. Mergers, to save distressed players who aren't doing so hot. And along those lines, I also think one of the major Wall Street players will invest in an infrastructure company like Securitize or T0 or Figure. I'm talking about a Goldman Sachs or a NASDAQ or someone along those lines.
M&A. That was a big swing and miss from me last year, but I'm much more convinced that I was more premature than I was incorrect on that one, so I certainly can see that you do as well. I see a national exchange here in the U.S. investing in a tokenization platform, honestly, because they're bridging the gap between those two verticals. So I think that's a strong one. My next prediction is that by the end of 2021, over $100 million in investment funds will be raised and deployed for direct investment into tokenized offerings, whether it's primary offerings or through hedge funds trading the markets. I think we're going to see some funds and capital into the space in a big way in 2021.
Oh yeah, dedicated security token funds would be huge for the space. If we see private funds raising under the requirement that their assets be tokenized, that would be a huge deal for the industry, because it would mean managers are beginning to realize opportunities for tokenized investments beyond just traditional asset investing methods. And I also think we're going to see, marketplaces heat up, Kyle. I'll predict right now that over 200 listings. Woo! 200 listings of security tokens will appear across what I will believe 20 live secondary players, and that includes, the DEXs that support security tokens like Uniswap. And to top it off, we'll see over 1,000 security token offerings through the primary channels this year. So we won't be able to learn about or cover all of them on this show, but I do think that will actually be the case this year.
Wow, hot takes only. That's what you get on the show. I love it. I love this prediction. I actually think that you're really going for the fences there, but 20 live players is something feasible, I think. We've got 4 or 5 now. We've certainly got close to 100 that are in development or in the works, and certainly with some of these decentralized applications that are not too difficult to iterate upon and build upon, I think that there's definitely an opportunity there for that to happen, and the 1,000 number is going to be interesting to see if we can catch up to that. For mine, I'm going to actually amend a prediction of mine from last year, but I feel that we are going to see dedicated security token exchanges for different products. Certainly, if we get anywhere close to the number that you've developed or hit there, we're probably going to need to. And so I think that in 2021, we're going to see multiple live security token specific, industry specific, decentralized exchanges or exchanges altogether. We're going to see a couple decentralized exchanges specifically focused on security tokens, and then potentially a few exchanges focused on specific industry verticals. So that Uniswap model has been so successful and so cost effective, I'm just sure many are going to follow suit.
In fact, we saw the announcement of Curio launching their own DEX just last week, so I'm sure you'll be right on this one as well, although I think you'll be wrong again about the verticalization, the focus.
Probably.
I think they'll be agnostic to start. My last prediction that I'll share with you all is that we're going to see a major venture capital fund, a Kleiner Perkins or an Andreessen Horowitz, as well as not one or the other, as well as a major Series D or up startup company raise a $100 million round or higher via a security token. Now, unfortunately, neither, I think, will be available to the retail public, at least not until potential trading in 2022, similar to your prediction, Kyle, about institutional deals in 2020.
That's fascinating. I would love to see that happen. I mean, as we often talk about on the show, pre-product startup equity is not necessarily the best use case for a security token offering, and a late-stage company assisting and proving the concept would be huge for the industry. My final Hail Mary prediction is that Coinbase will successfully IPO and will offer trading services for a security token in 2021. Not super confident in the trading piece of it, but considering Coinbase already has an ATS license and already offers custody for BCAP and Spice VC, it might not be impossible to see liquidity for these assets or potentially another one by the end of the year.
Definitely love that prediction. Seeing Coinbase trade security tokens would be major for the industry. So, I'm looking forward to reviewing all of these predictions at the end of the year, Kyle. I've got goosebumps already.
Well, it's quite a lot of predictions we have there, Herwig. So maybe you can give one last one for the road, a really radical something that just go out on a limb for. What you got for us?
I mean, I did have some pretty legendary accuracy there for last year, so let's give it a go. I predict that real estate will dominate the market by more than 50% in trading volume and retail STOs in the coming year. Those are primary issuances for regular non-accredited investors. And that leveraging real estate is going to be the next hot mega trend that brings DeFi and security tokens together. So what I'm talking about is people will buy real estate tokens and then they will stake them or lock them up into leveraged loan contracts.
Wow, that's fantastic. I think there's a chance that could happen. I mean, we're just going to have to find out. And you could also just keep up with us in real time, anyone that's listening, by following along every Tuesday when we release a new episode of the Security Token Show. You know you're going to get all those juicy details here. And if you have any questions about any of this, you got to reach out to us. LinkedIn, Twitter, you know where to find us.
And be sure to engage with the community at stomarket.com. That's where you can see security token pricing data. That's where you can submit security token news, events, STOs, and much, much more. So I want to say to you all, Happy New Year. And thanks for listening. I hope to catch you next week.